What's going on, everybody? Welcome to episode number 38 of the Traders Podcast. I'm your grateful and appreciative host here, Jeremy Ritz, excited to be with you on what has been a phenomenal week in the stock market. All you have to do is go and take a look at the charts to see what I'm talking about. And for everybody out there actively trading and investing, you know what I'm talking about. The SPY hit 6,000 today. 6,000. Amazing. Lots of people are hitting big profits, feeling great about the markets, how they're moving. As a result of this week's presidential election, that being over, that uncertainty taken out of the market. And it brings up a good opportunity to talk about the concept of selling into strength and buying into weakness, which is really a contrarian approach to the markets that we often don't consider, or we find it difficult to do because we think that the market is going to continue to run higher forever. And so that is not to say that this bull run is complete, that it's over, that it's done, because there's probably a lot more steam left. But rest assured, we will get those moments where things pull back, everybody panics, freaks out, and says that a recession's coming, the sky is falling. So we're going to get into all of that here today on the Traders Podcast, episode number 38. We'll do a little update of what's happening in the markets, and then we'll also take a look at Mr. Roku. And before we do all that, let's just talk about what is happening in the markets. And so this week, the election is complete. It's over. The uncertainty is gone, and you have seen the market has spoken of how it feels now that that uncertainty has been removed. And one of the things that I talked about on last week's show, and I've been talking about here for a few months now, is that the market does not like uncertainty. And because of that, we did see a little bit of weakness last week, some choppiness. And I was thinking heading into this election that there could be some chaos or some, how can we describe this? Uncertainty. I guess I'll just use the word uncertainty again in terms of whether or not somebody would be named the president early on, or if this thing would drag out, if there would be a recount, all those things. But to the market's pleasure, a winner was announced, and it was a clear winner. And you saw as a result of that, things just have taken off, and there has been no quit since then. And they pushed higher. A lot of big analyst banks had set a target for 6,000 on the S&P. That was hit today. And now you really have to think, all right, this thing has to cool down a bit. It does have to rest. It does have to pause if we are going to head higher. But the reality is things are pushing up. We're moving higher. The uncertainty is gone. And now really everything just shifts to what are going to be the new fiscal policies of a new administration with Donald Trump coming on board as the president. How will those policies impact the economy, the markets? And that's what we have to see. And one of the elements of Trump's campaign was to cut down on governmental spending. One of the things that he discussed was having Elon Musk be a part of his cabinet to be the Doge, leading the Department of Governmental Efficiency, where they're going to cut positions to try to clear up that budget. So we're probably going to see some short-term pain, probably toward the end of January. This is not just going to be a straight rocket ship up, but for now, we're probably going to see that year-end rally continue. And remember, November through April typically are the strongest months in the stock market, and that is definitely true here as of November. So that's what's transpiring in the markets. And now let's talk about the concept of selling into strength and buying into weakness. So today's topic is the concept of selling into strength, buying into weakness. And this is very appropriate right now for where we're in the markets, because we're just continuing to push higher into all-time highs. We're smashing all-time highs across the board. As I said at the outset of the show, the S&P 500 hit 6,000, which is insane. And what we're seeing is there's a lot of momentum, but we are getting into territory where things become overbought. And I often use with my coaching students the analogy of a rubber band, that you can keep pulling a rubber band, you can keep stretching it, but eventually, if you don't let it rest and come back, what's going to happen? It's going to snap. And so when we see things running like this, and let's say that we're in a trade where it's just running and running and running, oftentimes the feeling, the sentiment is, hey, let me hold on to this. Let's just keep getting the profit. Let's keep locking in profit. We're really not locking in profit, but just watching the numbers go up. But if you don't sell your position, close your position, then you're not going to realize your profits. And one of the things that we have to do as traders and active investors is know where to take profit or where to protect ourselves. So, for instance, Tesla is on a phenomenal run right now. As last I checked here, it was up to $326. It was down at a low of 138 this past March into April. So you see how fast things can run and push higher. But with that big run, locking in some profit and protecting yourself becomes important, because to think that it's going to just go straight up to 400, which it could, but we have to consider that it's going to get into overbought territory. It's going to become too extended above its moving averages. It's going to show up as oversold, or excuse me, overbought on the RSI, the relative strength index. And so what we need to train and condition ourselves to do is to go against that natural inclination to think, oh, this thing's just going to keep moving. It's going to go up and up and up. And while it can, you have to think in terms of probabilities, to where if you have 1,000 shares, let's say hypothetically you had 1,000 shares of Tesla. Well, what you could do is, this big move that happened, you could sell a percentage of those shares. Let's say that you want to sell 300 of those shares. What you can then do is put a stop loss in. Let's say that this is just an active investment, to where if it did pull back, you were protected to where you would be exited from all your shares and you'd lock in another profit. So that way, let's say that something crazy happens in the economy and the markets and things just absolutely tank. Well, you're going to guarantee your profit because you protected yourself, not only with the profit taking that you've done, but by having that stop loss. Okay. And also remember too, that the higher that a stock goes, the greater the chance of a reversal, right? Just think of, just when you keep going up and up and up and up and up and up, eventually it gets to the point where it's unsustainable and it has to come back down. Now, that doesn't mean that it's going to go to zero or that it's going to lose all of its value. No, but it does have to take a rest. It has to take a breather before it continues to push up. Okay. Now, some people will say, "Oh, there's exceptions to this. Look at Nvidia." Yeah, Nvidia ran. I mean, if you look from January into March, it just kept pushing and pushing and pushing. But what did it do? It eventually sold down, took a rest before it went back up and hit $1,000. So those things are going to happen. And it's all part of the cycles of price action in the market, right? The market is essentially cycles. It's waves. And price action comes and goes. It moves up, it comes down. It moves up, it comes down. It has periods of sideways action. And for us to be profitable, we have to capitalize on them and act accordingly based on what is occurring, right? And the other part of this is, we're never going to time things perfectly. You're never going to sell at the absolute peak. We can try to do that as much as possible, and that's why we do technical analysis. But the best thing that you could do is, whenever something goes on a strong run and you have a position in it, whether it's a swing trade, a day trade, or a long-term active investment, lock in a profit. And then if you want to ensure that if something crazy happens, have a stop loss in the money that's still going to generate you good profit, but it's still giving that trade room to run. Okay. And so condition yourself that, yes, if something's running, we're excited about it, but we don't want to get too greedy and think that it's going to run forever, because what could happen, it'll reverse. And if you haven't locked anything in or set up any form of protection, you could lose all your profit, which we don't want to do. So we want to train ourselves to sell into strength. Okay. And the other part of that is buy into weakness, right? A lot of times people will see things running like, oh, I got to get in. I got to get in. It's going to run without me. They get in and boom, it drops. We want to do the exact opposite, right? Take NVIDIA, for instance. It ran into March and then it started to pull back, right? And it pulled back pretty significantly. And people were afraid. They were panicking, like, I'm not buying this thing. It's 700. Get out of here. And then what happened? It went to $1,000. Then it split and it almost hit $150 today. If in pre-split, that would be 1,500, right? But think about that for a second. We're afraid to buy when something drops in price because we're afraid that it's just going to go to zero. Rewind back to this past August when we had that flash crash and everything dropped. Everybody was panicking. Oh my God. NVIDIA went down to $90. I think $90.88. Imagine if you would have bought 1,000 shares of NVIDIA at $90.88. All right. Now that's not difficult math. That's 60 bucks that it's went up since then. That's $60,000, right? All because you weren't afraid. And you know that, hey, the cycle of the market, it goes up, it goes down. It never stays down forever, right? Now you can have bear markets where it does stay for a little bit. But by knowing that, by not being afraid to buy low, buy good companies at discounts, really, it's like a sell. Hey, the market's on sale, bear markets or pullbacks. Hey, there's a sell over here. Let me get some NVIDIA. Let me grab some Tesla, some Apple. Let me grab some Microsoft. Throw a little Mr. Roku in here. Buy at a discount. When the market comes down, I'm going shopping. You got to take that same type of mentality. You have to buy into fear. Okay. And so it really just relates to the Warren Buffett quote, which is, I got to try not to mess this up. Be fearful when others are greedy and greedy when others are fearful. All right, I'll say that again. Be greedy when others are fearful. Be fearful when others are greedy. And really that relates to what we've talked about here today, selling into strength, buying into weakness. And right now, as things are ripping, they're going higher. They're not going to go higher forever. Lock in some profits. Take those profits. And whenever we get that pullback, because we will, it'll come, we'll get the dip. Don't be afraid. Buy the dip. Rinse, repeat. Do it over and over. That's all trading is. It's not that hard. And that is the topic for today. And guess what? It's time for now. I got to look around. I can't. Oh, here we are. It's time for Mr. Roku. Let's go. All right. So here is Mr. Roku. We had that big gap down on earnings last week. It got bought up and we pushed back and rebounded pretty nicely here this week. And really what we're fighting with right now is this 50 SMA on the daily right here, the 73.47 mark. And if it can get a close above that here today, it can close this earnings gap and get back up to 76. And that's pretty strong for the stock. If it can do that, then we could see it start to push higher, take out where this resistance was, where it struggled to get above. Now, it did hit that $80 mark whenever Netflix reported earnings a few weeks back. But this is what you like to see. You like to see a rebound like this. Now, there's not a ton of volume associated with this move, which I don't like. I'd like to see a little bit more heavier bull volume here. But with as bullish as things have been, and with the push higher in all things in the market, this could be setting up for a good move. And really what we want to watch for next is just the fill of this gap up to about $76 where it dropped on earnings. And so let's watch this next week to see what happens. That's the key area. And I'm done making predictions on Mr. Roku because every time I do, I jinx it. But what we're watching for now, and I'll mark this so we could check this next week. We want to see if it could fill this gap here up to 76 for next week. And again, if we go back to last year, November into December for Roku, here was the end of October into December. Let's mark from that low to the high. It went up, let's see, $53. Now, can we get a $53 from the low that it made here in October? Where would that take us? Just as a hypothetical, if that were to happen, 53 would put us way up here at, what would that be? I can't even see it. About 112 bucks. Can it happen? Who knows? But we continue to watch Mr. Roku. Think about how far this has come since we started monitoring this thing in January, whenever we started the Traders podcast, we were actually over in this area. And so it's making its comeback. It still has this gap to fill over here. We're watching, but that's an update on Mr. Roku. And ladies and gentlemen, that's going to do it for episode number 38 of the Traders podcast. My gratitude and appreciation to all of you out there. Thank you so much for being a supporter of the show. I truly do appreciate you guys. Shout out to everybody participating in Profit Pioneers. You've been great. And just a notification that I have a ton of new courses, a new course catalog coming for 2025, including Candlestick Kung Fu to be a master of candlesticks. That's coming soon. I'm going to have a futures course next year. And don't forget, I do offer coaching packages. If you're interested in learning how to trade this market, and what better time to learn than right now when things are screaming, there's so much money to be had out there. If you're interested in any of that, email me, CouragePaysBetter@gmail.com. And please, if you like the show, you like what we're doing here, please give me a like and subscribe, drop a comment, share with your family and friends. It really does mean a lot to me. And I'll see you back here next week for episode number 39 of the Traders Podcast. And don't forget, courage pays better than fear. Oh, and you know what? Guess what? Edmund and I may be making a comeback with the flagship show. So stay tuned. That may be coming soon. All right, everybody, have a great weekend. Take care.